CBS News Philadelphia is in your corner with big changes that could be coming to the way you save for retirement, including the addition of cryptocurrency in your 401k.
That's right. You might have seen the news that President Trump signed an executive order to clear the way for you to add new types of investment to your 401k. Consumer reporter Josh Sidorowicz is here now to explain what this all means for your nest egg.
Yeah, what does it all mean? There's a lot of questions on this here. So, I think a lot of people are in autopilot when it comes to exactly what they're investing in when we enroll in an employer-provided 401k, which is why advisors say understanding these changes is so important. So, as you probably know, typically most retirement plans, they are made up of stock and bond investments. What the president's order here does is it directs the Labor Department and regulators to essentially rewrite the 401k rules to expand access to these higher risk assets, like you heard, cryptocurrency, private equity, maybe even investment in privately held companies like a SpaceX. It's not that they aren't allowed now, but under current Labor Department rules, plan sponsors, they must put assets inside of those plans that are in the best interests of the participants. And those higher risk options tend not to fit that bill. And that is why they just aren't common already in 401ks. It's according to Jamie Hopkins, who I spoke with. He's the chief wealth officer with Bryn Mawr Trust. He says these alternatives, they present some unique challenges. For starters, when you have a privately held company, they aren't publicly traded, right? So it's hard to maybe tell how your investment's doing. Lack of transparency, that's one issue. I asked him how he's advising his clients on all of this.
Crypto and private markets and private credit all have different risks than what you'll say your traditional bonds and stocks have. So one big one for private equity tends to be liquidity issues, just meaning that I can't sell them very easily. So if you decide you want to retire and leave the fund, one reason these have not been in place is the money's not there.
What about crypto?
Yeah, so crypto, there's a really big uncertainty about how crypto will perform moving forward. Where a lot of other investments, we have decades of information on how companies perform, how people price it. That's also a challenge for private equity investments. So for a fiduciary to say, what's my expected returns over this for the next 5 years, and I'm going to put it in a plan, that's really hard to do.
Yeah, and so that's why he said, look, this is not going to happen overnight. The Labor Department now has about 6 months actually to lay out this new guidance, and then could take some time before we actually see major retirement plan providers like a Fidelity or a Vanguard start to offer them to employers. And then, of course, employers would need to work those into their plan options. So it could be years away, years before employees, you would be able to actually choose to have these types of options in your portfolio.
I think in this instance, time may be to the employee's benefit, right? Take your time and make sure it's to their best benefit.
Exactly. Yeah, this is not something you want to play games with your retirement, right?
Definitely
Absolutely.
not. Thanks for breaking it down, Josh. Appreciate that.
Thank you as always.
You can always contact Josh 2 ways. You can email him in your corner at cbs.com, or just scan the QR code right there on your screen, and that will take you to a contact page as well.